Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into the latest from the Wall Street Journal's weekend edition. That's August 23rd to 24th, 2025. It's a really comprehensive report hitting on current economic shifts, corporate plays, and policy impacts.
Exactly. We'll be breaking down the key takeaways, things like monetary policy moves, some significant M&A activity and brand efforts, government policy shifts, both for industries and, personal finance. And we'll touch on the bigger international picture, too, trying to distill what really matters here.
Okay, let's start with the Fed. Jerome Powell's comments from Jackson Hole seemed pretty pivotal. He mentioned potential rate cuts maybe next month, cited a softening labor market, and he also touched on tariffs, suggesting their inflation impact might be relatively short-lived. What's the upshot for the markets?
Well, that definitely fueled a rally. The hint of a September cut, that dovish tone, markets took it quite positively. You saw the Dow, S&P 500, NASDAQ all up, 1.5% to 2%? It suggests the Fed might be rebalancing its risks, maybe a bit more worried about jobs and inflation from trade for the moment. Though it's worth saying, some economists are still wary. They think tariffs could still push prices higher down the line. So that debate isn't over.
Right, an ongoing discussion for the Fed. So with that backdrop, how are companies navigating? Are we seeing expansion or more pulling back?
It's a bit of a mix, actually, but consolidation is definitely a theme, especially in mature sectors. Look at Cenovus Energy buying Meg Energy, about $5.7 billion. That's continuing a trend in Canadian oil, seeking scale, efficiency. But then you have consumer brands under intense pressure. Take Hooters. After bankruptcy, the plan to re-Hooterize, focusing on a beach-themed oasis, trying to find consistency when consumer spending is tight. That's about survival, really, rethinking the whole brand.
Interesting contrast. And not everyone's finding it easy on the consumer front, right? BJ's Wholesale reported disappointing results. They blamed stressed consumers, tariffs.
And Target, too. Their 11th straight quarter of flat or falling sales. They just named a new CEO, Michael Fidelk.
So what does this mixed energy, M&A, brand overhauls, retail struggles tell us about business strategy right now?
It highlights a kind of split. Mature industries are consolidating for strength, safety and size. Meanwhile, consumer retail is facing huge pressure to adapt. The struggles at BJ's, Target's leadership change, it shows how much economic uncertainty and, frankly, high prices are hitting shopper behavior. Companies either need to get really efficient through scale, like Cenovus, or find a way to truly differentiate, like the Hooters attempt. It's forcing major strategic thinking.
Okay, let's shift to government policy. Big news with the U.S. taking a stake in Intel. The aim is boosting domestic chip making, but it drew some criticism, a step towards socialism, some said. How does that move, combined with recent tax law changes, shape the policy landscape and maybe personal finance?
Well, the Intel investment is significant. It signals a real government focus on strategic domestic industries, securing supply chains. It's a form of industrial policy, prioritizing national assets, even if it sparks debate. And then you have the tax changes running alongside that. They create new wrinkles and maybe opportunities for personal finance. Things like Roth IRA conversions getting more flexible, maybe easing that year-end rush. Plus, enhanced charity deductions, changes to the child and dependent care credit, potentially more valuable for middle-income families. And using 529 plans for K-12 expenses. So you see this dual focus, shoring up key industries and also adjusting the financial levers for families and individuals.
Got it. And internationally, we saw Canada lifting some tariffs on U.S. goods, though not all. DHL suspending some shipping over new duties, and that review highlighting Europe's economic challenges. High energy costs, red tape. How does all this tie back to, the average person's daily life?
All right, these things aren't just abstract headlines. They connect directly. Those duties DHL mentioned, the pressures BJ cited. That can mean higher prices or maybe fewer choices on the shelf for you. And the tax law changes we just discussed. They mean you probably need to be more strategic about planning for childcare, education, even retirement savings to maximize the benefits. It really shows how these big policy decisions and corporate maneuvers filter down and shape household budgets, day-to-day choices. You have to be more proactive.
So as we wrap up this deep dive, the question we leave you with is this. How will this shifting balance between government intervention, like the Intel stake, and market forces reshape your financial landscape in the year ahead?